You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin, along with my co-hosts Dennis Dick and Garrett Cook. We're on the line with Christian Tharp. He's a biotech expert and the author of the 5-Star Stock Watch. Christian, thanks for joining us on this Friday morning.
Absolutely. Thanks for having me.
So let's get your take on the broader market right now. What are your expectations going forward?
Sure. Obviously, the topic of the last couple weeks and/or months with this first real correction in 4 or 5 years. My belief, first off, I guess, starting with the end in mind, is that I don't really believe that the correction is over, and I think that the market is in the process of doing a very good job of kind of faking us all out. One of the things, obviously, the technical analysts that I pay attention to are any kind of reversal type of days and/or weeks, especially when you look at weeks. So, for example, if you go back to the last week of August, where we had that real nasty 3 or 4 day stretch of a sell-off, the S&P formed a common candle reversal known as a hammer candle, which can tend to be somewhat reliable in signaling a reversal for higher prices to some extent. And the 3 or 4 weeks after that, we didn't really go all that much higher, but we also didn't breach those lows. And so then last week, we formed a very similar, identical candle showing another reversal, but this week we are actually following through. So because of that, starting this week off, my thought was that the S&P and markets were probably going to exceed their September highs. And you can kind of go back and look at, say, for example, September of 2014, we had a similar weekly candle. You can look back in the beginning of the year, back in February 14. If you keep looking back when the S&P formed those, they tended to be very reliable weekly candles. So having seen that, my belief was that we would exceed the September highs, and obviously the Dow has already done that, has exceeded its September high. I would think the S&P would join suit. So right now, my target is and has been roughly around 2050 on the S&P. There's a lot of resistances coming in that general area. First off, the 4-year channel that the S&P has broken out of. We broke out of it back in August. I think we'll retest the underside of that, and that sits just around 2050. You also have the 200-day moving average coming in around 2060. So I think the S&P is reaching for that, and I think we get there. Along the way, I think the Dow probably makes its way up to 17.3 plus or minus, and the underperforming NASDAQ seems to want to be trying to get back up to that 4,900 breakdown level, but I think we still have more juice in the tank right here.
Well, let's talk about the biotech. Almost immediately when you got on the show, someone in our chat room was asking for your thoughts on the IBB.
Sure. I guess the easiest way to describe biotech lately has been ugly. It's just obviously a lot going on there. I don't think anybody's too surprised when you look at, obviously, up until, say, 3 months ago, anytime I ever did a scan for best industry, whether it be monthly, 6 months, year, 2 year, 5 years, it was always biotechs. It was, they were always number one or number two. And anytime you look at a situation where you have those types of run-ups, when that kind of, and maybe bubble's too strong of a word, but once that selling starts, it can be kind of nasty, and we've seen that with the IBB. What has surprised me is this week, though, or the past 2 weeks, because my expectation has been for a higher market move, assuming the Dow had held 16,000, which it did last week, and then we followed through, which we have, as we just discussed. Then I assumed biotech might get a little bit of a lift finally, and that has surprised me a little bit when you look at the IBB. Biotechs have not really taken a whole lot of part in this rally, and I think if you look at the NASDAQ, you'll see the same thing. What I'd be watching if I were anyone keeping an eye on biotechs, I'd be taking a look going back about 3 years. If you pull up the IBB and you start from roughly November of 2012, and you draw yourself a nice little trend line that's going to go right underneath your April of 2014 low. You'll notice it'll touch exactly where your August of 2015 low is. You have this perfect little trend line that the market is telling us the IBB deems it important. And sure enough, just earlier this month, we tested it again 2 days in a row and held both times. So if you look at that, that is kind of the line in the sand I'm drawing for, quote, the biotech industry based on the IBB. That line is sitting just above 290 right now. So if we close a nice solid, 285, just something real nice and solid below that 290. I think biotech takes another leg down. I'm not sure if biotech has enough to get. I mean, keep in mind if the S&P makes it to 2050, we're talking about dangerously close to a 10% run up, and here's biotech sitting essentially where it
Yeah.
did 2 weeks ago, right? So I'm a little nervous about how weak biotech actually is if we can't rally when the market rallies 8 to 10%. But if we can hold that line, there's still some silver lining there. But I think ultimately we break that.
Christian, just to expand on your point there, and just looking at the same thing here, it's not only that the market has rallied here significantly off the lows, the laggards have rallied significantly off the lows. Obviously, all of your oil commodity stocks have rallied nicely. You look at some of the tech that have been beat up, like IBM, you look at Caterpillar, Deere, beat up, they've rallied nicely. BlackBerry, even a stock like BlackBerry, $6 their 5 trading sessions goes now 7.29. But the one sector that just cannot seem to catch a bid here is the biotech stocks. Do you have any reason why they didn't participate in this whole leaders to laggards rally?
No, I'll be very honest with you. No, I'm shocked. I'm kind of stunned because if you look at the end of August going into September, biotech did move with the market and
Yeah.
did kind of come up with it. And I've just been I've personally been caught way off guard. I was getting into some biotech names over the last week, especially because I thought the market was going to go
Yeah.
higher, and I thought, well, biotech may lag and underperform like it has been, but still we're gonna get some higher prices. And I've just been shocked. Like you said, even the energy names that have been they've been getting kicked all those same times where I'm doing scans and biotech's been the best. Guess who's been the worst? The energy names, and here they are even
Yeah.
going higher. So I know that a few weeks back it was easy to pin the tail on the Hillary Clinton comments, but now it's kind of like that ship has sailed. And I don't know. I think it just goes to show, and you can kind of see it in the Nasdaq too, with the Nasdaq's inability to keep up with the S&P and Dow. And this concerns me because I kind of look at that generic little risk-off type of thing. And you look at the Nasdaq stocks, and you look at biotech being, think back to when we had the, you remember when the solars were all the rage a few years back, and
Yeah.
remember before that it was all the shippers like dry ships. Remember that?
Those
And it
things are
seems-
ugly.
Yeah, they're awful. Like dry ships is like what 20 cents or something.
Yeah.
But I remember when like dry ships was like 100 and some odd. But it seems like what concerns me about the health of the overall market is the common thread between those kind of those wonderful runs that we had. There was always that hot. Remember the home builders before that. Every time that hot industry popped, that's when the market tended to pop. So I'm watching biotech here, not skyrocketing right off. Remember last year we had that horrible little beginning of the year, and then biotech took off again. A little worried about the fact that biotech is not doing that this time, and what that's telling us about maybe the health of the overall market.
What about on individual names? Is there anything in the biotech that is participating? Because obviously we look at the overall index, we can look at the big guns like the Biogen, Celgenes. Are you seeing any money flow into any individual names in biotech, or is it just hands off in the whole sector right now?
Yeah, I mean, it's been hands off. There's been a few that I thought, like say for example, Insight, INCY. As we kind of push up at the end of
Whoa.
September and beginning of October, that thing skyrocketed
Yeah.
and was looking great. But then look at the last week.
Just
It's just
murdered.
been awful. Yeah, I mean, it's like everybody's just getting, and you've seen some of the names like VRX and ILMN, Lumina. These guys are just getting thrown out. I will say that Intercept has had a pretty good run. I didn't really see that one coming, but it's had a pretty good last week or so. But I think that stalls probably at 200 if it gets
200
there.
is big, yeah.
Yeah, and I think you and I last time we talked about some good news on Intercept, and we said if it could get above 200, and sure enough, that's where it stalled last time. So
Yeah.
I would watch it again. But everything just seems to be, and then one biotech name gets a great day, so you think to yourself, I'm going to try to jump on board that. And of course, I thought VRX looked great at the end of last week when it pushed above 180. It had stalled there 2 days in a row. Finished up the week getting above 180. So this week in my daily video series, I said, hey, VRX, if it comes back to 180, you might have a trade. It gapped right below that and back down to win again. So it's just been tough. It's been tough, especially if you're trying to trade these things. It's been one of those things where if you catch a profit, you got to grab it and go.
Just one more question about the biotechs, and I've wondered this myself. If you put the entire run, though, in perspective from the last 5 years, like going out to your weeklies or even out to your monthly charts there, like you look at a stock like VRX, I mean, back in 2010, this was a $13 stock. and now it's 250. So you'll wonder, okay, well, it's not participating in this laggards, but is the biotechs? I mean, it's all what your time horizon too. In the last 6 months to a year, yeah, biotechs have lagged, but when you look at it from the perspective of the last 5 years, biotech's still been on a pretty incredible run. I mean, put Biogen in perspective. Even in 2010, Biogen was a $50 stock, and then it got up to 480. So you look at it at 279, you say, oh, what a dog. The thing was at 480. But when you look at 279 and the thing 5 years ago was $50, it's still been a pretty good performer over the last 50 years. So do you think it's still just maybe profit taking from people from the last 5 years that's holding the sector down?
Yeah, I think you're absolutely right. I would encourage everyone to look at, like you said, pull up the IBB just as an example, and put it in that perspective. I mean, you pull up a 5-year chart, IBB is hanging out down there at $80 or something like that. So we're still talking about, trading up here in the 300s. I agree with you completely. At this point, I would say, just remember that obviously things that, go up, they got to come down eventually. We can't go up forever. And at this point, I would not be concerned. I would be concerned if biotech breaks, because you'll notice through every single pullback, even when you go back to the beginning of 2014, that was a nasty run that some people, at that time, that seemed awful, right? IBB fell from 275 clear down to like 210 or 220. That seemed really bad at that time. Yet we'd kind of held, that line, that trend line we just discussed. So as of right now, I would say, this looks like something that's within the reasonable context of the run-up that it's had. Where I would get concerned is if we broke that line that we mentioned, because then that's telling us that this at least this version of the trend appears to be ending and possibly more of like a longer-term downtrend. But like you said, even if biotech's lost another 10, 20, 30%, when you put it in perspective, a lot of these I mean, biotech as an industry is up, 600%, or at least it was. So I agree with you completely about putting into context at this stage, but I think if we break much lower than, say, that 290 area, then we're now looking at, probably another leg down.
We're on the line with Christian Tharp. He's a biotech expert as well as the author of the 5-Star Stock Watch. Christian, you also mentioned wanting to talk about oil. What are you seeing in this continued rally?
Sure. Well, I remember a long time ago when we were discussing oil, I always thought oil would make it back to 40, because if you look at a long-term, multi-decade look at oil, once it broke below the 55 area, it just seemed like the next target down was 40. We dipped a hair below it in August. Now we're coming off of it. I think this has a little bit of run to it. And of course, if we're trading oil, a lot of times we're trading the energy names. And so if you look at the OIH, the Market Vectors Oil Services ETF, I was keeping an eye on that because if you look back in January and March, beginning of July, you'll notice that ETF kind of just kept bouncing on this $32 area, 31.5 to 32. Once we broke it in July, down we went, came back up into that same 31.5 to 32 area and kept stalling. Yet here we are pushing above it while also forming a common simple price action known as a double bottom that seems to be signaling higher to come. Do I think that means oil is, going in a big, huge secular bull? No, not at all. But it certainly looks like in the short term that because of this move higher, that oil has got more in it as well. So I think people might want to, if biotech has been something you've been really enjoying, maybe we take a breather on that and start jumping on the energy name train for a couple weeks here.
Any energy names that are sticking out to you?
Sure. I liked WLL. I liked this Whiting Petroleum when it pushed above 20.
Right.
I like that to at least make a run to 25. I love that one. I liked BTU, Peabody Energy. I like that to keep running to at least 30. And if it can get through 30, we have to start looking at 35 and then 40 when you look at that chart. 40 is a great expectation. If oil can really get a couple weeks in it, maybe a month or so in it, those are probably my two favorites, BTU probably being tops on my list right now.
We've got a couple of biotech stocks that are coming up in the chat, and we've only got about a minute left with you here, but if you want to, do you mind taking a quick look or sharing your thoughts on them? So the first one that's showing up is, I'm going to say Calithera. It's ticker CALA. A couple of people were talking about it in the chat. It's about $7.52 right now.
Yeah, actually, that's interesting. I was wondering if this had been in the news or something as of late, and I missed it because I had actually had some questions on this as well. Mm-hmm. I like the fact when you look at this stock comparably to biotech that it's done better. I like it from here to make it to at least 10. I don't see any reason why, unless, again, we have this major reversal. I do like that strength yesterday in the face of, a biotech that was in the red all day.
Yeah, absolutely. We've been on the line with Christian Tharp. He's a biotech expert and the author of the 5-Star Stock Watch. Christian, thank you so much for joining us this morning. We always appreciate having you as a guest, and we will definitely bring you back on again soon.
Thank you so much, guys. Have a great day.
Thanks, Christian.